Bookmap Academy. We do this every Thursday. We didn't meet last Thursday. I was away, and um, so that happens every now and then. But typically every Thursday, 4 p.m. And if you're not familiar with the Bookmap Academy, what we do here is, there's no cost to it. You will have to at least register over at bookmap.com and have a free version to get access to Discord. And you can start even creating content with the free version. And there's a pathway to earning Bookmap for free, as well as add-ons and data, by just creating content and journaling. And getting feedback for it. I mean, it's a win-win. And we're here during this session to go through your content, and we have all the coaches here. They've already marked up or gone through your marked up charts and given feedback, and then we're just here to bring you up to the stage, open up the mic, and let you also guide us through your decision making. All right, so just a couple of news items. We're continuing on this month with our Blue Jacket competition with Tradier, the sponsor for this. That you'll get an additional 1 year of Tradier's Plus subscription if you sign up. So all you have to do to enter this, you can win Bookmap over $600 subscription value, and all you need to do is just create content in Bookmap, mark up your charts, upload it to Instagram, X, or LinkedIn with hashtag #FreeBlueJacket, and that's it. You're in. You can take a screenshot, use the QR code there to enter, or go to bookmap.com/bluejacket as well. All sorts of great content already up there, and you still have like a week or so left to add more. And potentially win the coveted Blue Jacket hoodie, as well as the subscription values and the Tradier 1 year subscription, which is a really nice offering there. Now we're here to go through our Bookmap journaling Academy journaling process and building out our playbook. 1 through 3 here are very important, but it filters down to number 4, which we cover here in detail. 1 is the impetus, or what's moving that market, understanding levels on the higher time frames, the key levels where most traders are going to react, and then developing strategies and scenarios around there using your filters like previous high of day, low of day, overnight, time of day, VWAP, market profile, or whatever you might be using to give you that bigger picture or kind of medium level picture understanding of an opportunity. Then you select your proper setup for the day. You determine your risk and your sizing, and you execute with the order flow. When it comes to your setup, it should be mechanical. The other things are going to be based on your experience, your insights, and there's a lot of objectivity up here as well. But when it comes to the setup, though, it's just mechanical, really. So you'll know what a good setup looks like, a bad setup, or an okay setup looks like after you go through and build out your playbook. All right, building out your playbook. Well, that leads into Bruce's pilot program. It's like a subset of the Bookmap Academy, with the goal here of building an edge. After talking to so many traders over the years, that's the biggest gap I've seen, is most traders don't have an edge. And if you don't have an edge, you shouldn't be trading if you don't know if you have an edge or not. You should have a process that helps you define and build that edge. If you don't have it, this is a pilot program. It's included with your Global Plus subscription, and that's what we do, okay, is build out that edge for you. And I will have a lot more materials for this program very soon that will build out not only an edge, but a trading plan, a risk management plan, a self-improvement plan, a journaling plan, as well as a what was the last thing oh yeah, and also avoiding tilt. As you guys know, as you become better traders and you have an edge, now the risk isn't having an edge. The risk is going on tilt, and just having that one day, that one trade, whatever it is, that wipes out your account and all of your gains. and we're going to really focus on that as you guys progress in the program. All right, so let's go through the disclosures and jump in. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. If you are interested in that pilot program or the Bookmap Academy, go to bookmap.com. Click on the More button here, and under Community, you'll see Academy here and Pilot Program here. Just click on the link, and you can read about it and sign up as well. Note, you will need Global Plus for the Pilot Program. All right, so let's jump in and welcome coaches. We've got a full lineup, so let's see here. John, I've got actually you first, but let's see. I think, well, heck, we should go over. Tomi was the first in the room, so it's apt to cover him first as well. And it's been a little while, Tomi, so we'll get you up here, and also DNT on the stage. And I think that's everybody. Yeah, okay. All right, the way we go through it now is the coach will first go through, give his assessment, and then let the trader respond. So, John, welcome. Good to have you. Good to have all you guys back after a week away, and take it away here.
Okay. This is a very nice trade by Tomi. He has his passive accumulation. It's a trendline break and accumulation trade. He has his trendline break. He has his skew in place above the market. And in my view, he waited just a little bit too long before his entry getting short down there at 75.25.5 or so. He rates his checkbook analysis all 10s. And so my comment was, well, if you have that, take the trade where you had the trend line break and where you had the transition from sell side, from buy side to sell side, which he notes on this chart. So yeah. I'd like to know from him a little bit why not take it there, with the benefit of having the skew just above where you could locate your stop for protection. That would have given him a little bit more profit potential on this trade. But I think he did a really nice job. Actually, he combined both the trendline break and accumulation trade with the low volume pullback for his entry, which is fine. And I think in the future, once he gets used to taking the trade, maybe a little bit earlier with the trendline break accumulation elements all satisfied, that might be where he adds on, or at least it'll be a confirmation with the low volume pullback presented there right about 75.25. So in general, I thought he did a really nice job. Tomi, maybe you can discuss why your entry and why you waited that long. I can see the confirmation, but it just does seem that you kind of let that one get away with you a little bit.
Yeah, so the main reason why I entered a bit like later is because of the heavy liquidity on the bid.
Okay.
So usually every single time I'm trading this, I want to have like a clear like way down.
Yes.
So I feel like that if I enter a bit earlier, heavy liquidity was on the bid, and that's a challenge. So that's really hard to get. I mean, it's not hard to get through, but sometimes buyers can step in. So I really wanted to. I really wanted the bid to kind of I didn't want to enter in front of heavy liquidity, and I feel like that when the impulse move happened and buyers stepped in again, and then sellers stepped in again, I kind of wanted to bring it down to the heavy liquidity level down there. And I feel like that the transition happened earlier, the trend line the trend line broke down, then kind of buyers stepped in, and then sellers stepped in again. And then I really wanted the liquidity to kind of disappear from below, and then kind of wanted a bit of a pullback, and then target that heavy liquidity down below. But again, all of this is coming from like personal experience. So usually every time I enter and there's heavy liquidity on the bid, buyers step in and they bring it higher again, probably even making a higher high before they bring it down lower again. So I mean, that's the only reason why I didn't enter earlier.
And I can understand that. I feel the same way. I like to have a clear shot. But you did have a few handles there before you would reach that challenge. So if you did get in where I'm suggesting, you could manage your stop pretty close there. But that's just something you're going to have to test and look at. But I know where you're coming from. I feel the same way. I just felt like with everything being satisfied so nicely on the trend line break accumulation and with the skew in place, that you had a pretty good opportunity there before you started to hit those buyers at 75.25 and 76.25, as you noted. But no, but very good though. I think you did a really nice job here. You were right at your level, which was perfect for the entry. And then a more conservative approach is where you did enter. Nothing wrong with that at all, and you managed your stop very nicely. Yes, sir. Bruce.
Yeah, great. I've got all sorts of comments, but I'm going to turn it over to David and let him comment so I don't take everyone's comments.
Thank you, Bruce. Good morning, good afternoon, good evening, etc. No, nice chart in here, so and well discussed there, John. So I echo pretty much everything John's saying, and I'll probably just reiterate a couple of the ones. We've got that as the price is scooting up, Bruce. We then get that new liquidity sandwich, if I call it that tonight, between sort of 33 and 36, 37 that comes in. I don't know if any of it got filled, really. In the area there, I'm not sure on the left if the green bubble nibbled any out of that sandwich, or it was spoofed. Hard to say. The clues, labour in the point. It comes back down, price comes back down, and then it comes up, and it doesn't touch that liquidity, and that's it. Yeah, it prints that, that lower level. That's the break. Then we start to fade. Then we start to fade down. I like the overnight high mark. That's a good key level.
Yep.
As you're rightly saying, John, there is a chance there for you and I might be in a little bit earlier. We know where the stock can be above that liquidity, and we can be getting in whether that's around about 28, 29. That all said, I love the trade you've actually taken here, Tony, because this is. And I'm going to be talking about Vinfras later. You're de-risking this. You're waiting for a little bit more of the market to evolve. You're waiting for the volume bar to grow. And we can see that round about 38, 1038, 39. We get that nice volume comes into that liquidity. It blips back up. Let's throw that into the burst of a low volume pull up. And then comes the selling, and you get on board then. And you make 4 or 5 handles, which is fine. Honestly, fine. So there's great trade, but there's some other little bits that you can perhaps hone on if you wish. Back to you, John, please.
Bruce.
I'll turn it over to DNT and any thoughts.
Not a whole lot of thoughts. The checklist. I just was curious about the checklist as well. Tommy, would you agree that when I say that when you're doing the checklists, you put them all 10s just because it's not really like a huge priority right now, but it might be a priority in the future. Does that sound
Yeah,
accurate?
that's correct. Yeah.
Okay. Because that's how I feel. That's how I felt for a long time as well. You don't really know what to do with it. You don't really know what the purpose is yet. That time will come. And when you're in the live market, which you are, and I think I brought this up for you a while back too, where you might want to, you don't have to consider it now, but I've been considering it for the past month or so, where the checklist is maybe becoming a little bit more of a priority for me as I go forward, because I want to start seeing the grades as I go forward, so I can start actually grading these trades, and so I'm gonna accumulate maybe 50 of them, 100 of them, eventually down the line. But anyways, I want to start accumulating these trades, 20, 50, and then I want to see what does an A setup look like, what does a B setup look like, what does a C setup look like, And even though like it's not really that easy now, or you might not have a priority on it now, going in the future, when let's say you and I or somebody else is like trying to hold, we have a weekly meeting at the end of the week or something, or like, you know, all I had was C setup, or all I took was C setups, or all I took were A setups. At least we start to talk about this more. It becomes something that's takes very little time to for me to look at and to discuss with you, like, hey man, if you're having a hard time, maybe we should start focusing on A setups. Well, then we can look back and be like, okay, this is what an A setup looks like. Now we can actually go back and start to like we can skip the C setups, and just maybe wait for A setups or something like that. But I can see it not being a priority now. But I mean, what do you think about that? Do you agree with that?
But yeah, usually, I mean, obviously, I'm looking at the checklist. So obviously, if it's like if I don't have 3 levels of passive accumulation, I'm not gonna put it like a 10. But like yeah, it's not really a priority for me. I mean, if you check some of my other trades, I actually, if the aggressive accumulation is not there, I put it like a 7 or maybe even a 6. But I mean, in this trade, I actually thought that it's a 10. I mean, I had the passive accumulation, I had the key level, I had the target, I had the seller stepping in, so
Absolutely.
that's why I decided to put it as a 10.
Yep.
But yeah, I can I can see where you're coming from. So yeah.
Okay, cool. Awesome. Yeah, so that's all I really wanted to hit on, because I'll probably keep bringing this up. I think I bring it up with Nadia as well, because I think Nadia added some stuff onto her checklist. So it's just something I might keep revisiting. So just wanted to see what everybody's opinion was.
Yeah, yeah.
Yeah,
Thank you.
yeah, sounds good. Shark, any comments?
Not much after that. I what DNT said makes me think a lot. I think grading the setup, and I don't really grade my setups as far as grading them on the checklist, but I think I need to start. Everything he said there kind of hits home. I do have a quick question for you or John regarding a liquidity skew. What are the mechanics behind that? Why is it repelling price rather than attracting price?
I mean, it's just the condition of the auction, and a lot of times, like I mean, here it's kind of hard to say or give you a straight answer, but I think it's a lot of times of like either sometimes like maybe this big block up in here, it's like they're just kind of throwing the wall up and saying like we captured what we needed above the overnight high here, and we want to get filled down in here, and that's kind of the impetus that's moving the market. And it's kind of hard to say, because sometimes like they're battling out. This is a battle zone, and sometimes like David said, they'll come up and trade into it, and maybe just trade a little bit above it and then exhaust out and then get a massive move to the downside. So it kind of it's subjective. There are scenarios to go through. That's the best answer I can give you, Shark.
Okay. Yesterday's price action really had me thinking about it, and then Laura brought it up earlier, which had me thinking about it more. And then this post obviously offers it up right there. Fantastic markup, Tony. Great work.
Thank you.
Yeah, Tommy. Wow. Last time I think we talked about Vinfra and how he just made a quantum leap, and he, through his hard work and dedication, and some coaching, along the way, and listening, but he kind of broke through overworking, and doing too much, and then focusing on the key elements. It's different, but I see a big leap here. I see maturity and experience in this, and way to go. You've been putting in hard work as well, and you're taking the more probable setup here. and you've learned that through experience. It's really great. So it's really just echoing what everyone else said, and it's heartwarming. I totally agree with DNT on the grading. This is an important part. I want to dive into a lot deeper so that you guys know what an A trade looks like. Now, I wouldn't grade this in A trade. I just wouldn't. This is not a 9 or a 10 in my book. Now, I don't have the higher. I know I have the overnight here, right? And I guess this is an hour after the open here. You marked up all the things correctly. I just don't see a big transition in here. So I do like your decision of, I mean, it's really a low volume pullback what you grabbed. But the what John was saying was like, this liquidity, and look at the exhaustion here. Twice it retraded, and it's usually twice like that, and you see sellers coming in. It's going to break. Look, I shouldn't say it's going to break. It is more likely to break and just test back down to liquidity and structural levels or high volume nodes. And then you do have a small skew right here, which you can see, right? And that helped. That was like this is my insight. I'm not like one of these larger traders. I don't have insight to them, but I think there's a lot of testing and seeing the demand and the supply, and like here they're going to throw some supply on, and what does the market do, right? To kind of probe it, test it, see it, there's no buyers in here. So we're going to get a test back down into some of the liquidity, some of the structure, and then this might have gone up to highs for the day. Anyway, I think you you're front running here. This is why you front run. I love it. Also you're noticing the trap up in here. You're noticing all these things. It's great. And you're also passing on. I think it's really wise because you're passing on, like, I think there is something in here for this move down. But I'm not seeing the transition really starting to unfold from what I see here. And you're passing on it too. And then now the transition has happened here. This is clearly the low volume pullback, and you get in with sellers to hit this liquidity and you get out. This is like kind of a gimme, and you're here to just take it, and move on to the next, the next trade. So I think that's about everything I had.
One other thing with respect to the skew question, what's important also to me, at least in this one, is when the skew came in. It was right when it was topping out, and right where those trap buyers came in. That's when they lowered the wall, right? They put that wall up and said, so if that had been there the whole time, it would be a different story. But the fact is they came in with this huge wall right at the time that those buyers were being trapped. And so I understand about the huge transition to sellers, but you also have to think, where are they going to give it up? Where those guys were getting long up there at 33 and 34, where are they going to get? Where are they going to get out? And that's just about where I was talking about getting short. So I always look for them. But I just want to mention that in terms of the skew question that Shark raised, was that time is always important to me. When did the skew come in?
Yeah. And and look at it too. It's not up here. They're below the high.
They're right on it.
That's aggressive.
Yes, that's a squeeze. Yeah.
And you can see it in here too, right? But buyers took them on. So,
and the nice thing about having that is that you can use that to manage your trade. If prices start whittling away at that skew, well, that's when your indication of when you can get out. You don't have to wait till your stop gets filled up there at 75.39. That can be sort of a barrier that if you see those getting knocked off, well, then you can get out. But if not, it's a great insulator.
Yeah, 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 exactly, exactly. I mean, these are kind of more subtleties and understanding of the context, and it's I mean, but heck, I mean it's more difficult is what I'm trying to say, but that's what we're here for, is going to the next steps. Yeah, great insights, John.
Yeah.
Yeah, thanks, John. That makes a lot of sense on the
Right.
time.
Sure. So you just add that to your tool chest, the element of time when it comes into considering skew. I think if you look at that in your studies, you might begin to see that relationship. It's at least important to me, and that's how I distinguish between the two.
Yeah.
Whether it's okay.
I mean, like John, what you always look for is first is like you're like ding 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 ding. They're down here.
Yeah.
Okay.
Yeah.
All right. So they got filled here, here, and here, and then they're throwing in the kitchen sink here, basically.
Yeah. Yep.
So where do they want it to go?
Yep.
And it's giving you a roadmap.
Yep.
Now that's a liquidity roadmap. The aggressors and structure is a little different, but liquidity roadmap is, that's where, if we find the aggressors interested, that's where they want to go.
Yeah.
So
And without the heat map, you can't do this trade.
Yeah.
You don't know where to get out.
Yeah, exactly.
I mean, his trade management is excellent. His exit level was perfect.
Yep.
And like I said, you can't do that unless you know where those orders are.
Yeah.
Okay.
Tommy, any last comments on this?
I mean, obviously, like if you look at the heavy liquidity, the liquidity vol up there around 35, like 75, 36, and 35. Like if you see that heavy liquidity kind of coming in, you see the aggressors, you see like nice liquidity as the target. You can probably enter earlier, but if you look at the data bars, like if you literally enter there and you look at the data bars, like you don't see anything. Like it's really small selling there. So
True.
yeah, like if imagine entering there and you look at the data bars and like it's still buyers. You don't even see any sellers. So yeah. But
you're right, Tommy. You're absolutely spot
yeah.
on. What tips the bar for me is those trap buyers, because I know they're going to give up. Because where would you want to get out if you were getting long up there? Pretty quick, right? Oh shit, no, let me get out of this. And there's a lot of them.
And if you see my low volume pullback trade there, it's kind of obviously like the trade is there, like the low volume pullback, the structure, the impulse move. But if you also look at liquidity, like that's the only place price can literally go, because you don't see like much above it.
Yeah.
Because the liquidity higher, the liquidity skew, like they pulled it, and then they kind of keep adding. If you see the color, they keep adding like below the price. And yeah, that was another confirmation for me to bring it down there, because of the liquidity coming in. They would keep adding there, and they pulled it up from higher.
Yeah, and they pulled that skew because they got their wish.
Because they got it exactly. I mean, here's the evidence to support that idea. It's like we're going to provide liquidity and get our target. I mean, this is how I read the story. This is what I learned from another trader, was like, they're going through a scenario of they have like 1,000 contracts or more. What are they going to do? Well, they're going to put their targets in first, and then they're going to get kind of filled up in these areas up in here, and then like throw something like this on to skew that order book. It's kind of like a spoof, and get filled on the way down. And or opposite, maybe they're trying to get filled to get long. I don't know, but what I'm trying to get at is what John just mentioned. They pulled here. Why? Because they got what they wanted. And you'll notice these relationships over and over again. So this is where Bookmap is I think really does a nice job.
Yep.
Okay, let's move on. Was there anything else with Tommy? I think that was it, right? That you
Well, I
had?
had a couple of
Did
trades.
you?
Can we go through it?
Oh yeah,
Do
yeah,
we have
yeah.
time to
Oh
go
yeah,
through
yeah.
his next
I'm
one?
sorry. I'm sorry.
So it'll be number 2, that one there.
Okay.
Okay.
Yep.
And
Oops.
in my
Sorry.
comments, I had excellent trade, full stop. I got nothing here. This is another trend line break in accumulation, and I thought it was beautiful trade. And in this case, he got short right after the trend line break because he did have a clear shot for his targets. Right? You see where he got short?
Yeah.
Right there, exactly. And now he's identifying his levels of liquidity, and he has a fair distance, so he doesn't have to wait for anything to clear up. It's right there for him. Really not much to discuss. I mean, I think it was a wonderful trade. All of the elements were satisfied to take the trade, and he got right in as soon as he got a break to the downside. He marked a little trend line for his structure there at 75.45, and when it busted that, he was in. Bruce?
Yeah, I'm again trying not to steal the thunder here. Turn it over to David.
Mm-hmm.
Thank you. This is a sucker's punch trade, really, for me. We've got the cash open, and we're here at 9:30. We saw this pretty much today, if I recall.
Mm-hmm.
Price scoots off, everyone's getting giddy. All right, we're back on the bid, BTFD, it's all that stuff. Off I go, spank, spank, spank. Let's get going long. And then, oh no, it's coming back, and it's coming back at pace. You can see the selling of those angles, Bruce, is more aggressive than on the bid. You've got the volume, got the break, but I'm just adding in, it's that time of day, that sucker's punch where they did it today, drive it up, and then before you know it, you've gone down very, very hard. So that's my comment to add on to that one. Over to Shark, please.
Mm-hmm.
Shark.
I see what you mean, David. The open is very tough to trade. I tend to avoid it.
Yeah.
But this is once again, Tommy, fantastic markup. You really have identified all the order flow here.
Right. D&T, any comments?
No, I think Vinfra asked. So a long time ago, maybe a month ago, Vinfra was curious about times of day, and Vinfra, I gave you feedback twice now, I believe, and I haven't heard back from you yet. But one of the things you asked was about time of day, and this is one of them. This is the open, and so this is probably one of the most important parts of the day here is where, and I think I mentioned it in the reply to you, but the open, you're looking what's happening at the open, and normally you would anticipate like a swing, open swing high, and then an open swing low, and this is like that open swing high you see there, and Tommy's shorting that, looking for the open swing low. You might not get it, you might get it. I mean, it just has to be in your plan. And this is one of those times of day where if you're anticipating it for it to go down, and let's say you're bearish coming in for the day, and this is your trade right here. This is a good trade. This is one of the times of day that I noted, and I put it in a comment for you, Vinfra. This is one of those times of day, and then after this is what do you say, David? 10:30, 11:30, the EU close, right?
Yeah,
I mean,
EU close.
it's almost
Today
like
with
every hour, right?
today's EU close was a 180. It must have gone up a good 20 points, literally to the second. No, it's got to know them for sure.
Wow.
William Shire has the midday frame at 11:15.
Perfect.
Cool. Yeah, this is like, so if I was coming in bearish, I'd be looking for some type of way to get in short, and this is your key level, right? So, and if this and the trade fits, then take a shot, take a stab. If you're coming in with no plan, though, it's a little bit different.
Yeah.
Okay.
This is great.
And what Will does talk about, if I cut across, guys, is that sort of 10 to 15 minutes within the open, and we're seeing that here. And if I drag into the chat, you'll have today's as well, which it's rinse and repeat, Bruce. You can always look at that a bit later. Yeah, time of day. Sorry, thought I'm going to talk about, isn't it, Bruce?
Yeah, I'll look at your chart in just a second, David. Yeah. So Tomi, on this one, what I mean, like again, like just your experience and your maturity is coming shining through, and you're really seeing these well. Again, I think you should grade them, get into the subtleties, so because your next step after you go through the live and trading small, the next step is to start scaling and scaling up and scaling down. So you're going to have to, your experience is going to go from seeing what a good example of the trade looks like in replay mode to being able to make the transition in forward testing in the live market, and then start to understand the subtleties and the differences, what works for you, what doesn't, but grading and being able to say, like, wow, this is such a good trade, I'm going to put more on. Compared to other trades where you're gonna say, like, yeah, I don't really like it, but I think I've got something here and I can get something out of it, and you're not going to put as much on. Now that's going to be an art form. It's going to take a bit, but like you're building it. You're building out your playbook. So it's great stuff. Look at the difference here that you note with the transition. Okay, so I mean that's great. So you see the transition, and you got the structural break, and you're starting to see that volume coming in. So you're going to ride that momentum, yeah, great stuff. The target down to the open, right below the open, nasty stuff, and it looked like it, obviously it continued, but that's hindsight. If this bounced out of there and you trailed this, you would have, gotten 6 or 7 points, 7 points compared to, getting, what did you get here? Like almost 10,
15 maybe.
Yeah, or more. 37, yeah, almost 15 or so. So it's up to you but that's another thing. Like, what kind of day is it? What time is it? Do you want to take all in and all out at this point, or do you want to trail? I think you made a good decision. It's just below the low or the open. There's high liquidity here. It's a strong move. Take the points.
Yep.
Nice stuff.
Thank you.
Let's we got one more, John.
I have one more for Tomi. Yes.
Okay.
Now the first two trades were good. This one, not so much, which will be good to go over, in my view. All right.
Hit it.
This is a trend line break accumulation trade again, coming down to the overnight low, which he has clearly marked at 75.80. He has his accumulation that he's identified in a trend line break. And then he has the transition, and then he has some structure created between 83 and 88, somewhere in there, in which he was able to avoid a little bit of that chop. And then he got long out of that chop, which is fine. But I think the target really should have been up there near the 7,600 level, because that liquidity has been in there since the market fell off at the open. I mean, they kept that liquidity in there, and 7,600, for whatever reason, those numbers just seem to have a magnetic effect, and that liquidity is there the whole time. So he places his brings his target. He starts above that, which I don't understand, and then he brings it down with a little bit of that liquidity that came into the market at 91. My view is that this is another one because the liquidity is up there, because he did reach the levels, the overnight low. You've got a little bit of a skew down there working at 75.75. I think my trade would have been getting in where I indicated there with that transition from sellers to buyers on the volume side. And then my target would have been up there near the 7,600 level. So tell me a couple of questions. First, your targets. Do you understand what I'm saying about having
Yeah.
that target at 7,600?
So normally,
Was
yeah.
that
So when
just
I
like an
enter,
automated thing where it put that
yeah,
target up there and
exactly.
you
So
brought it
when
down?
I
Okay.
enter, I have it set to like 5 points, and then I
Okay.
manually
All right.
adjust it. So
Okay. All right. I thought
that's
so.
that's
But you're waiting a little bit. You're trying to be careful. I get all that. Absolutely. But I don't know if there was enough there for me to take my target at 90. I think in my view, I would have just waved it and said, I'm too late, getting in there, because you're really taking on a fair amount of risk. Especially when they're still plotting liquidity down there at 75.75. Those levels are still in there. So this kind of could have gone either way. I'm not sure if I was hard pressed to take the trade, I would have taken it where I indicated, but this was okay. And this separates this trade from the others because they're not quite as good. I wouldn't rate this an A like I would the other ones. You follow what I'm saying?
yeah. I mean, yeah, I agree. Unfortunately, here again, I don't have I didn't include what happened after I got out. So probably it made it up to the 7,600 level. I didn't want to. I mean, if you look at the volume dot, the buyers stepping in around 7,590. I mean, that's where I wanted to enter because I saw the volume coming in. But I agree that my target should have been up at the figure.
Yeah.
And also, if you look at the passive accumulation, it's relatively good. Especially like liquidity got filled at the bottom of the trend line. And that's kind of an extra indication for me to enter. Maybe I could have entered a bit earlier. I don't know. I didn't want to get lost in the chop. And then once I saw buyers stepping in, I saw the volume dot. Yeah, probably I could have probably should have put my TP up at the figure.
Okay.
But I forgot to include what actually happened after I got out. So I don't know if it made it up there or it started kind of chopping around and going lower. I don't know.
Yeah. I don't remember.
But yeah, the key level was there again, and price actually went below the key level, so that's a great thing. And then the target was up there, so yeah. But yeah, I agree.
Yeah, because if you locate your target up there where you think it should be, you can always come down. But so I think that should have been your first move. After the assignment of the target up there at 04, you bring it down, and it's always easier to just go to the market to get out rather than trying to move it up out of the way because oftentimes it can clip you. And you're hoping for that. You're hoping for buyers to come in here and push it up real quick for you. So all things considered, I think the only difference that we talked about was the location for your exit. But
Yeah, I agree.
generally speaking, very good. Not as good as the first two. You should be able to identify that. But you're doing a great job. Just keep going. Really good stuff. Bruce?
David.
Thank you. Yeah, no, great stuff there, Tommy. So yeah, I echo that as well. What I'd add here is, I know it's how I trade, how John trades, how we all trade, and I'll echo the point. We've got to find our own rhythm on that. This time of day, again, we're in that 15 minutes, 10 minutes of the open. And as rightly, a lot of you will say, I will not trade that. I'm going to wait for the first 30 minutes, 40 minutes, even longer. And that's fine. There's no right or wrong. You've got to trade what you feel right with. These type of trades are those who use rifle trained on that. In terms of sort of ready, aim, fire, there's no ready or aim with these trades. You've just got to fire. So where John is rightly saying with the yellow arrow, let me get in there around about 10:50, 51. That's because he's not doing a ready and aim. He's just pulling the trigger, as I will do as well. There are higher risks because the structure hasn't quite got together. Your checklist isn't quite together, but it's that muscle memory, the reps and sets, as we talk about, Bruce, that allows you to feel the market, feel the screen, as you talk about with Scott. That means that when you do get in, you've got the odds on your side. Back to DNT or Sharp, please.
Yes, very good.
DNT, any comments?
When you ready, or when you just fire right there,
Yep.
David,
Yep.
where would you stick your stop? Right above that liquidity block at 76?
No, my stop on this would be probably below 70.
Really?
Below 70. Yeah,
You-
it could be quite a while.
You would take a shot here and put your stop way down here.
Yes, in terms
Wow.
of the system going in terms, because what I'm doing on this time of day on that open, I'm keeping my stop fairly wide and then promptly moving it around. Now I know you hear me say different things because there are times when I'm using my Ninja ATM and it's in there with sort of a 3 or 4 point stop, bang, bang, bang. There's other times when I'm just trading, not quite without a stop, Bruce, but I'm getting in and then I'm moving my stop around.
Yeah.
If that makes sense.
No, I get that.
Yeah.
I do that a lot. Okay. I think anyway. I got some comments after everyone else.
Tommy, you already mentioned this about, where you stopped your recording right after you covered your trade. But when you come back through your slides, and I highly recommend you do, you could just filter for yourself in your images and just flip through all your slides and look at them in hindsight, especially if it's a replay of something you traded live and your performance or lack of performance is fresh in your head. That's what I like to do. But when you come back to your slides, you're going to want to see what price did after you got out.
Yeah, I agree. Yeah.
So that's good to notice.
Yeah.
So I just want to make it quick because we've been on Tommy for a while.
We have. We haven't
always
gone
good stuff, Tommy.
We haven't gone over him in a while, and it's really good stuff. So
always good stuff. Always good stuff.
Oh, it's good stuff.
Yeah. So this is the open. We just talked about the open on his last trade, and this is like 20 minutes after it. And so Tommy taking profit early on that second trade, the second trade that we just looked at, he took profit early. We didn't know if it was going to go down to magnet number 4 prior to pulling back. And taking profit was good, I think, on that second trade, Tommy, because this is what I would anticipate to happen if shortly after or before, like you don't know when it's going to pull back, but oftentimes you'll see a pullback like this. And so taking profit on that second trade that we were just looking at, pretty good idea. You don't know if it's going to hit that magnet number 4 that you were talking about last time. But this is the pullback that you might anticipate right here. That could have took your could have took your second trade out prior to continuing down. So if you on the second trade, if you were to extend your target, it could have just reversed right just like this on you and stopped you out instead of you taking a profit on that second trade that we were looking at. What I'm trying to say is that this is the type of reversal that one might anticipate on something like around the open time, especially.
Yeah.
So I think that was good. And then this trade is obviously you're taking the pullback to this move here, which was down. So the strong move down, and it's they're taking profit here, overnight low, and it's pulling back up, possibly for a potential short again around here somewhere, right?
Yeah.
Okay. So I see this a little differently. This is the kind of trend line break accumulation I like. I don't see a whole lot of aggressors come in. I would love to see this area down here filled in more. I would like to see these bars bigger in the delta bars. But you know, there's some good stuff in here. So as you note, you've got the overnight low. Okay, we went below it. You've got the trap, and this is a stop run in here too. This quick move is going to be, you know, stopping a lot of people out. And look where they come in, right above where this broke, and they're coming in hard. Now I don't like this kind of volume up in here. I really like to see the big dots, but this to me, and the angle, this looks to me like it's gonna do like a, you know, a low volume pullback, and it's going, and it's gonna hit here pretty quickly, is what it looks like to me. Maybe even above the cash open, right, and retest back up into here somewhere. So I did look it up. I think this is the price action from that day here. So
Nice.
I'm not sure, but this looks like that swing at like 03 or 04, 76, 03, 04. Is that right? Yeah, that's it. I think that's it. So this is a short squeeze, and you know, a powerful move. So I like it. I would be in it. I would be aggressive, I think, with this. And I like your entry. I like this a lot, that you say you didn't get caught up in the chop. You waited. And even though it's like small little chop, typically on these kinds of moves, like it is small like this. And it usually has bigger volume dots, but it's small, and then it just moves. This is David's kind of trade where he's just getting in aggressively, just, you know, hitting it.
In my club.
Yeah, I'm just shocked to. I mean, David. I mean, it's just. I was kind of shocked to hear. If I were in here, which I might, you know, my stop would be like, you know. It either works or it doesn't. Behind. Yeah, it either goes or it doesn't. And if it doesn't, I don't want to be getting stopped out down here.
Worried. Yeah.
Right. So I don't mind. I like exactly what you said. Be aggressive. You have a feel for it. This is what you're looking for to unfold. Jump in, be aggressive, and either it works or it doesn't.
Yeah.
And I'm fine with that. I just have been. It's just, you know, I've been stopped. I've tried, and it just grinds against you, and it just kills you. Yeah. Anyway, that's what I see, and also your angle.
The angle is there, isn't it?
Yeah. So I like this. This is kind of what attracted me to this setup after seeing, you know, the accumulation. Was the aggressors taking control and moving it. Anyway, it's another variation. Anyway, you know, great work, Tommy, regardless.
Yep. And in these markets, they're so fast, they can cover that 20 handles in a heartbeat.
Yeah.
Really
as we just saw at the close there, as we saw.
Oh dear Lord!
Yeah,
and even today during the first couple hours, I just turned the screens off. It was just nuts.
You went fishing.
Yeah. Oh gosh!
If I dig myself into more of a hole on my stop, I guess what my point here over the years, both of you, all of you, is that it's dynamic. You know, it's not that I'm using the same stop day in, day out. I'm feeling what I want to trade with the market, how it's behaving, and the amount of risk I'm looking to take on board, rather than going, well, it's 2 times, you know, the position, it's this, oh, I got stopped out, or I got stopped out. No, I'm adjusting it to the session. That's, I guess, if there's trying to catch me, John, dig me out this big hole I've got myself in, please.
David can trade with a wider stop than you and I, Bruce, because he's got more money than you and I do.
Yeah, he's turned into one of those guys. Like, oh yeah, my win rate's 95%.
20 handles, no problem. Me, I'm ready to hang myself.
Stop, yeah.
Good stuff.
Um,
Congrats, Tommy. You're really doing good work, sir.
really.
Really nice to see. It's
Very
fun to
nice.
watch
Yeah.
each week. Yep. Yes, sir.
Yeah, thank you guys. Thank you.
I'll have some next steps for you in the program as I build out the program, because you know, you and others are doing really well, and you guys need the next steps, and you know, get in there and be aggressive. You know, get into the, you know, the forward testing, the live trading, get into psychology. Like I said, I've got it outlined. And I'll have it for you guys in a few weeks, and it will happen. So anyway, I've already got it all detailed out. I just need to put it into a form that's consumable for you guys. I wanted to mention something here. This was actually from the Pro Trader webinar on spotting opportunities in volatile markets. And John, I showed in here your setup, or one of your trades on options in a volatile kind of market. And there's something in here that really caught my eye, that, well, let's put it this way. Like, I think this is, you know, I viewed this as, this was a huge leap forward in your trader evolution. And I mean, I want to be very humble about saying that, but I really believe that. So here's my thought, or what you know, my insight here was, you know, the way that you were trading earlier, like, and you're still trading this way, but like, when you see an opportunity, you're getting in with like two different entries. And at the same time, and then two different exits, with the you know, clear risk management of getting out, paying the bills for that 80% like fill that you're going to get, you're pretty sure, and then building your account with the next runner. And here I see David's influence. That's what I see. I don't know if it makes sense or not, but
What a cowboy. I
yeah,
am.
totally. Like, this is like, okay, these are my levels. Here's a price spike, a really big dump into it. This is an opportunity. I'm seeing the aggressors come in. I'm jumping in, boom, boom, boom. Like, and then like take some off up here, and then let it run. And then, you know, looks like you were still, yeah, you were still in this. Your other contracts are up here, right?
Yeah.
What I'm trying to say is, what I have seen with professional traders, when they're in their evolution, is like moving beyond that, like, oh, you know, I'm just trading a couple, you know, of positions, and, you know, managing my risk so carefully, to like, here's a kick-ass opportunity and I'm going to profit off of it.
Way to go.
And you're not, and risk is top of your mind. You know the risks, and you're going to manage it correctly. But when you have a good opportunity, you're going to take full advantage of it, right? Because what if you put on the same amount here? Like, you know, let's suppose, like, okay, I don't know, it looks like you have a lot of contracts on here. So
Yeah.
let's suppose you had 10 contracts, okay? But let's suppose you got out 5, you know, someplace like here, and then you've got a runner, which I don't know where you would have, you know, taken it, maybe a liquidity level, or, you know, up in here. But and you continue to go on that path. Basically, what you're doing is you're hurting yourself. Now, this is not you. What I'm talking about is just in general, because like it's way more advanced. It's when you really know your edge. But if it's like playing poker is probably the best analogy. You're dealt a different hand every time. Okay. Well, if you're dealt a really good hand, you should bet big. It's as simple as that. So when you get a good hand, you win big, and then when you don't get a good hand, you bet small, and it whittles away at your stack. But like you're still in the game, and you're still taking shots at it, and it could turn into a winner or a big winner as well on the as the deck plays out, or the hand plays out. Anyway, am I belaboring the point here, or am I on to something here, or is David just influencing you?
Well,
John.
the levels are key to my work, and you see that all the time. But there's also a hierarchy to the work, to the levels. So that vol trigger, when I see that, and I see that across all three indices, the NASDAQ, ES, and the Russell, they all were lined up right about at that level. Now I'm only showing one chart, but that was the reason, and I jumped on this pretty hard. Now it is a sizable account, but it's still 12 contracts, and I have a very limited risk. But the key is, and it's not so much David, although I do look and study and admire everything he does. It really was, I have this vol trigger and I have this other key level working here across all three indices, and I'm gonna jump on this thing, and then that was it for the day. And yeah, it really has to do with having the levels is one thing, and then going through and developing a priority, I guess, to each of the levels. And that started with Spot Gamma, because he lists the levels according to level 1, 2, 3, and 4 as a level of importance, as significance. And I took that lead into my work, and so I have a sequence of levels that have a priority that I assign to them, and that's what helps me decide, the scaling. So that was really the idea behind that, jumping on that pretty heavy, because those vol trigger levels, they do stick pretty good. Brent's done a great job with that, and he's pretty much dialed in with those levels.
Yeah. Well, I mean, I was using you as an example here to talk about like how you hear these stories about multi-million dollar traders. Well, how do they do it? Well, it's only a handful of trades that they're making like really big money on, and it's a handful of days throughout the year. Really? That's because they know when there's a big opportunity, and they leverage the heck out of it. Mm-hmm. It's a big distinction between that and a trader who's just like always taking the same risk. So anyway, that was my point, because and it gets back to what we were talking with Tomi about, the importance of grading.
Mm-hmm. Yeah, because he can use that as a vehicle to scale.
Right.
When he has an A trade set up, he can scale up a little bit.
He can put more on.
If he has a trade that he made a boo-boo on, a silly mistake, then you wait for the A trades to fix that, to fix the account with that. So I think it's good to have that scale where you can identify it. Yes, I went in this, both hands and feet, which is what this was for me.
Yeah.
And then the ones where, if it's kind of sort of like Tomi's trade number 3, I'd be real light on that. Yeah. If I did it.
Yeah.
Right.
So, guys, I'll open this up to debate, because this is kind of I'm convinced of it. But there's a lot of other very profitable traders out there who take the same risk on each trade. Doesn't make much sense to me, but maybe like it does. If you guys want to, if you have any insights on that, at least this is where I'm going with the pilot program as well, is in the beginning, absolutely take the same risk on each trade, but grade them until you know the difference. When you know a good setup, now you're getting ready to experiment with that. You have to be very careful, because if you get really hard-headed about stuff like that and stubborn, you wipe out your account. So you have to be very careful. It's a difficult step, I think, but that's why we're grading the trades in the pilot program. All right, no one's
I
going to
recommend everyone.
take
I
the bait.
recommend everyone read Bogdan's book, Traders of Our Time,
Why?
because that emphasizes in every single chapter what you were just talking about, Bruce.
So okay, so that's what they are doing, or they're finding like the best traders. It's a handful of days out of the year, or a handful of trades out of the
Yeah,
month, or
every single trader has a chapter, and every single one emphasizes what you were just talking about. Fantastic book.
okay. Well, anyway, guys, like I'm taking up the time just to go over that, just because I think it's a really important topic. I thought John had a good example here to illustrate the point, and that the to think about this. Don't do it now until you really know your setups, and when you have to know you have an opportunity. Like, you get pocket aces on the draw.
I'll tell you.
You know.
Well, the first consideration, I think, is a math equation. You think about how much cash you have available to you in the account, and that's going to determine your starting place. Then you build that up,
Yeah.
and that really needs to be a lot. Everybody has their own personal preference with that, but these brokers advertise, "Hey, you can trade with a $500 account." You really can't. You cannot.
Right.
For me, it's always been twice the overnight margin. Cash in the account for me to trade 1 mini, period. And that gives you ample amount of dollars to work with. So that's the first thing. And then you can start looking at, tiering up. And then the other consideration is that you can first start off on micros, which lowers the dollar, but still that same math equation exists.
Yeah.
You still got to have ample funds to start with and then build from there. Then you can start looking at quality of trades and assigning a different risk according to what you see, right?
Yeah. Well, I mean, so the way that just to let you guys know that we're going to do it is 2% of your account. That's your risk money every day. If you blow that out, you're done for the day. No ands, ifs, or buts.
Yeah.
And 6% for the week, you're done for the week. In fact, you should half your size when you come back next week until you build it back up. It'll take longer, but like it'll save your account. We transition from understanding the setup and building an edge to not blowing your account out. That's anyway, some I wanted to get into it. This reminded me, and I wanted to also use this example from John. So anyway,
great points, Bruce. If I quickly chip in.
Sure.
What I would say, I mean, I've got my journey. We've all got a journey, and I've talked before, Bruce, when I started my own book and I took Forex, and I was trading with Mike Patterson and other guys, Brian Littlestone, and these guys were dropping 20 lot contracts, and I was just staggered by what they were doing. So I've had my own journey, but I think if I swing in, I know there's a couple of golfers on the bench here. You play your own game. That's the thing. So like people like John and myself, and others, we've evolved. You see us dropping larger contracts, having those great setups, and then we go and smash the market. We beat the crap out of it when we can, and we know we can. And those are the big fat days that Scott used to talk about years ago. You got to feed like a pig on those other days, and the other days you're just going to scrape by. But that's if you want to be that golfer, if you want to be a scratch golfer or a low single handicapper. But if you're happy playing on 14 or 18, playing at the weekends with your mates, that's also fine. So traders in the room, if you just want to be able to come into the market a couple of times a week, make $400, $600, that's also great. That's also great. It's play the game you want to play, because it takes a certain type of animal, John and me, to be able to do that as well, doesn't it, John?
Psycho. Yeah, absolutely, David. Yeah, I agree.
David, I still think you're like a teenager, basically.
Oh yeah.
The way that you're trading is just like an aggressive teenager. Like
Oh, big time.
Did John
Yeah.
say psycho?
what's that?
Did John say psycho?
Yeah, I think he did. Yeah, yeah.
Well,
Yeah.
Yeah.
here's the
Yeah,
thing.
motel.
I lost everything I had in the October of 1987 crash and came out of it thinking, oh, this is really good. This is what I want to do. Yeah, I'm a psycho.
Yeah.
Oh, goodness. All right.
Yeah. Well, anyway, it's an important topic, and
It is.
like
Really.
I think that's a really good point, David.
Mhm.
I think you're right. That's the way to go. It
Yeah.
depends on the person.
Yeah.
But what I have seen though is those that do are aggressive when it's good and they know it are going to make a bundle more than those that just play the same amount of risk.
Yeah.
So
Yeah.
a big difference.
Yeah, I'm not sharing the trade I just did into the close, but while I was on the screen and talking, I could see the market going north, and I'm just spanking on the bid very hard, and then easing out really quickly when the numbers are going up. Yeah.
Mhm.
It's not everyone, they're rightly, no, I'm not going to play the power hour. I'm just going to play some nice ETH trading, or I'm going to trade a little bit lunchtime because it's a bit more choppy and it's a better range, so I won't get torn a new one. Also nice.
Okay.
So you're scaling on the way in, aren't you, David? Are you doing like some DCA stuff? Or are you
I am
getting like?
scaling on the way in, yeah.
Me
But
too.
it's something I got to work on. And again, we're sharing here. Got a good friend Marco, who's an ex-Goldman Sachs trader, lives in Dubai, and we catch up every now and then. Fine, dogs around the fire hydrant sort of thing, Bruce, sort of conversation. And he was ribbing me because he said, "You're still coming in with like 3 to 4 contracts. What are you doing? You've got to come in with double figures and scale from there." And he's right in some ways. I'm still an armchair trader of starting with 3. But John, you see how I can get up pretty quickly to double
Yes,
figures.
absolutely.
But I'm still starting with 3 or 4.
Yeah.
So I got to put my hands up. I got to evolve a bit, really. Anyway, sorry, Bruce. We could.
No, but
these are good topics.
But if you do that and control your risk, like you're going to have days where you make like, I don't know, 10, 15, $20,000.
Yeah.
And then you're going to have days where, okay, maybe you lose, a couple grand here and there. And there might be several days like that, but you're still going to have those bigger days where you just, it's clearly going to outshine.
Yeah. And that's the game I'm happy to play. I'm happy to do that.
Yeah.
But again, I'm at this all day like John is, or pretty much all day.
Yeah.
Hence, full-time pro traders. We're not. Yeah. This week I'm a bit light on the screen time, but this is what I do. But also, I'm conscious the guys and girls in the academy. You can come in and just play an afternoon once a week, and as long as you know these setups that Bruce is teaching us, you can make some bucks.
And you can work your way up. I mean, you can start with micros, and if you do that, like, and I'm not advocating, like, I think, David, you made a really good point. It's not for everybody, but just be aware of it. And if,
it is.
and with micros, you can get there pretty quickly, and then pretty soon you're going to be trading minis,
Yes.
Yeah.
Yep.
I think as an example, I may have the name wrong, so disrespectful. Was it Rob Davis? We used to come into the room a fair bit, and he was open. He said, "I just want to make $500 a day. I'm a truck driver or something. I just want to turn $500, and that's all I'm after." Brilliant. Let's help you get there, Rob.
Yeah. All right. Let's go on. Oh, my God, Tommy, I think we spent
we're running behind.
An hour and a half, or hour and 15 on you. At least an hour and 10 minutes or so. Yikes.
David turned into The View. That's the trouble here, Bruce. I've turned into a session of The View.
So the next time we see you, Tommy, we're gonna look for a lot of improvement after all.
We want to see quantum leap, Tommy.
20 lots getting dropped. Yeah.
No pressure, but yeah.
All right. Thank you, Tommy. Great stuff.
Thank you, Tommy. Great
All right,
stuff.
thank you guys. Thank you.
Yes, sir.
Let's move on and let's see. So as you guys know, we've kind of grown the academy, and this is a new new direction for us. Like there's the Bookmap Academy, and then there's the pilot program. Now they're both related. The Bookmap Academy is a subset of, or I'm sorry, the pilot program is really a subset of the academy because it's specialized. And you know, it's about really focusing on a few setups and building out your plan and your edge. The academy is for any kind of setup. But anyway, so other coaches in the academy have assignments, and we'll go over theirs as well in here. If we don't have time today, we will certainly be putting them into the chat for you guys so that you can you know, get their feedback. So coaches DNT, Laura, Shark, and Trading is Life. I don't think Trading is Life submitted something this time, but we have their feedback, and we'll be putting that into the pilot program for your feedback, or for your coaching feedback. So let's move on with, we'll go to David. Hold on a minute, find it. There it is.
Got Vinfra.
You got Vinfra. Well, we went over Vinfra last time.
Okay.
All right. Well, let's go. We'll go over it. And Vinfra, we're going to have to kind of keep it a little shorter, I think, this time. But anyway,
Okay.
let's invite him up, and let's get some insights here.
Certainly, great chart in here, Vinfra. Really like the markups. You've got the checklist going on, which is fantastic. You've got time of day. Love that. This is another trade, Bruce, early into the cash open. We're sort of 15, 20 minutes into a common theme that we've talked about a little bit earlier on. Got a lovely angle of price picking up. What I like about this, Vinfra, is, and I probably said it a bit earlier on about you, is that patience. There's an entry here where I could have got in, where the mouse is at the moment, Bruce, but no, you've waited for the price to break out of that structure. It scoots off up to number one. It then comes back in terms of that low volume, and then bang, in comes the volume. You're also been a bit more patient. You're still waiting for it to get above that second structure, Bruce. So he's waiting for it to get above number two. He's got the volume on his side. We can see the liquidity up at number four, the top of number four, which is there. And he's in, and off it goes. We've got high liquidity that he puts his target up. Perfect. And then as the price scoots up, there's defending the liquidity, coming back in there at the 40 level. I'm not sure if that was an option level, John, at the day, but you know, it's supporting the price upwards for the moment. Bang, a lovely, beautiful trade. I just love the patience on this one. It's really nice. I probably would have had one or two trades before you got in, but I'm taking a much higher risk. So it's back to that theme earlier on, Bruce, in terms of being really patient, making sure your checklist is working. You've got your volume, you've got your angle, you've got your structure, you've got your liquidity. There's a bit of time of day here, and bang, in you go, literally with a slam dunk, and making 5-10 handles, and you can be done for the day on that. Vinfra, what did I get wrong, or what did you get right, please?
Beautiful.
Yeah.
Hello, do you hear me?
Yes.
We can, sir. Welcome.
Okay, thank you. Well, you have said about everything. The patience is one of my the things that I had to fix before.
Okay.
I think that now I have enough patience to stay calm and check all the checklist and wait the time that is necessary to enter. So I know that some people enter earlier at the break of the pullback. Maybe, yes, okay, because we have volume, we have, but there is also a little bit, yes, more confidence than me. So I prefer to be a little bit more conservative and be sure that the volume bars is not a one shot, you know, because we see this every day. we have a big volume bar, and you say, yes, I'm going in, I enter in this trade, and then the two volumes bar later you are out. So it's a little bit confused sometimes, but so I adopt this conservative behavior, and I try to trail my stop and protect my operation the best as possible.
Yeah.
And I'm stopped, My target is not filled.
Yeah.
You know, you see,
You have the right
in my
intent. You have the right intent.
yes, my target is not filled. I am stopped just there. Yes. So that's why I protect my operation, my trade with the training, because I don't know, I don't let the trade the market go against me. I heard this a lot, sometime some weeks, some months ago.
Okay.
So I always try to apply what you say, and that's why I train my stop like this. I try to be two structures below, but sometimes when I saw this liquidity, this wall there that doesn't fit my target, I said, okay, I go, I protect my operation, I protect my trade, and that's why I've done, and that's why I'm stopped with this trade. And when you see the volume bars, the selling volume bars, I think it was the best thing in this trade.
Yeah, the selling came in, but it was still a nice 10 handle trade. So I love the patience. I love that approach. You know, quoting numbers and statistics, the market, John will know it better than me, can be moving 100 points each way all day long. If we're only trying to go in there and take 5 or 10 points, we're just trying to get simple 5-10% of that move. That's it. That's all we're after. And so there's plenty of opportunities to wait for those setups to come to you. Really good. Really impressive.
Thank you.
Good. John, sir, what do you think?
The impulse move identified by number one, that sets up the trade, right? And that impulse move is nearly twice as much as the structure that it broke from.
Yeah.
That's a pretty big move on some good volume. So that after you got the Bruce, can you
You mean
highlight
this
that?
impulse move here, right?
No, I'm not. No,
You're
No,
talking about
no.
you're talking about this
number
one?
one. So draw
Yeah.
the structure, the height of the structure, and then that impulse move that broke away from that structure is almost twice as high. I mean, that's a pretty
Oh,
good
twice
move,
as high. Got you. Yes.
right? You
Right.
see that? I mean,
Ye-
if you take the
It,
height of that,
Vinfra, I really can't see it. It looks like it's kind of trending like this, right? But
well, he's marked the structure, right?
yeah. Okay. Well, yeah. There's a smaller
Yeah.
structure. Okay. And then yeah, absolutely, it's twice the
So
height.
what I'm saying,
Yeah.
it's pretty good, one and a half, and some pretty good volume. So that
Yeah.
sets up the trade, and that's the beginning of the move. So when we break the channel there, where you've highlighted with number two, which is just brilliant, you have your trend lines coming down. A break of those trend lines would have sparked me in. I wouldn't need to wait to take out where you got in because of that impulse move in number one. And so the more impulse that you have on this type of trade, the better the trade to get in, the more aggressive that I can be. So for that reason, after that big impulse to begin with, and that really small, low impact, low volume pullback, a break of that channel would have been enough for me on high volume to get in. So it would have been right there, Bruce. Exactly. Right.
Yeah.
Right. And again, it's kind of like what David was said earlier. It's either going to work or it isn't. So my stop's going to be pretty tight in there because it needs to take off. I'm anticipating that any buyers that come in at this point are going to join in what was already been created by that impulse move in number one, and that would carry me up. Your target was perfect. Your management was great. But when you get those big dots up there near your target, take the money. You know, you figure with those large volume of buyers up there and it doesn't make it, I would be inclined to just take the money pretty quick. Yeah. And not wait for it to pull all the way back. That would be my only critic of managing the target, is that when you do see those big volume dots and it doesn't take off to the upside, there's a reason for that. And I would be inclined to take the move, which would be a really nice, profitable trade at that point. Really good.
Yeah.
Yeah. Or bring it up that close, something like that. Exactly. Yeah. But somewhere up in there, anytime, especially in these markets, if I get plus or minus a couple handles on a big sizable trade like that, I'm taking the money. Not here to set
Cashier
up
in the
any-
casino.
Absolutely. Yeah.
Yeah. No, good comments, John.
Yeah. You
Good
follow what
comments.
I'm saying, Vinfra, in terms of the
Yes,
entry?
yes, yes. Yes.
And so it's not, it's just something to remember when you're doing your review work. What was the nature of that impulse move to begin with? And oftentimes when you have a real strong impulse to begin with, then you can factor that into your other decisions, right?
Okay,
It's
thank you.
the angle
Yes,
again
sir.
of that
Angles in place. That's another
Yeah,
thing.
it really is.
Absolutely. Yes,
Yeah.
sir. Yeah.
Would you have taken that trade early on, John? Like perhaps I would have around about 47.
Yeah.
Although maybe not, because you got liquidity in front of it. Would you have, on the far left, Bruce?
Or
On the
47.
the initial,
47.
at 9:47. Sorry.
Oh, at 9:47. Got you. You mean here in the
you know,
breakout?
Yeah, with the breakout there, John, this early into the frame.
I don't know what's happening before then, so I can't tell,
True.
David.
No, me too.
So
Good
it's
call.
hard for me to tell. But I think what's nice about this is that it just goes right through that little bit of liquidity that's
Yeah.
above that structure
Yeah.
on an impulse. I mean, they weren't playing around here. This was a move. And the time of day was right where you're going to have this kind of thing.
Exactly.
I just like the idea of that strong impulse to set this trade up. You know, those kinds of number one setups where it just barely, gets out of the structure's way. That's not a good trade. You want those
No.
where it just comes barreling out of the gate, like this one.
Yeah,
And
yeah.
then on low volume.
And often the underlying of this, as we all know, will be it's either Nvidia, it's one of the big, Mag 7s that's getting absolutely caned upwards and then dragging the indice along with it.
Yeah.
Perfect. Is Shark still with us? Thank you, John. Great comments. I
Yes,
think GNT's popped out.
Yeah, I'm here. Fantastic
Perfect,
market. You're doing really great work. Those big buy bubbles at the top, John, where you have buyers, and buyers, and they're not going anywhere.
Yeah.
They're also not consuming that offer sitting right there at 55 or whatever it is. I can't read it too well, but what's holding those back, do you think? Is that just sellers reloading, just hitting it?
Well, it's profit takers coming off the book, right? Because the liquidity is not so much there. Never know. My point was that once we get up that far, it's really immaterial to me. I don't know the answer to your question, Shark. I just think that with that much buying up there, that much volume, why isn't it going? And I'm just to the point where I don't want to know the answer. I just want out. Right.
Yeah. So there is no real answer, right? We just know that they're not. They're still buying, and the price isn't going anywhere.
I mean, that's a lot of money there. That's, of unrealized profit. My old trading partner used to tell me, don't be a dick for a tick. And that's where, that's where that comes in. Yeah. See that you'll never forget me, Vinfra.
No. Take the chip.
No, I know.
That could just be a bunch of profit taking.
Sure. Yeah.
Okay.
And again, it could be on Nvidia.
I mean, I think it's a hard thing to answer. I think it's a combination of a whole bunch of things. I think it's turning. I mean, this is a big move. So now you're going to find some sellers interested at a certain point up here as well. So there's clearly going to be some profit taking too. I don't know. I kind of view the profit taking as more as like here. Maybe some, yeah, some in here for sure. This I don't know. Stops, profit taking, maybe people going short now. I mean, look, here's the 750, 75.50. It went up above it, and now it's below it. So I don't have any hard answers for you, Shark.
Well, the liquidity
No,
that
no,
comes in at 75.40 would get me antsy.
That's 75.
Yeah, they're eating through that
Here.
liquidity.
When you see that liquidity coming in there, that new liquidity coming in there, and you're long that with
Right. That's what you look for.
no 75.40 down below, all that liquidity that's coming in as right in there, right? That comes into the market just as you're close to your profit target. I would be looking to make an adjustment, bring my stop way up or get out. That would be a problem for me.
No, your entry is on point, Vinfa, and I really like the way you trail your stuff up in there.
Yeah.
Let's see.
Back to you, John. Sorry, thank you. Back to you, Bruce. Sorry.
Pretty much in agreement. Like this. And again, just compliment you, Vinfra. Like the improvement, and also look at the clarity in here compared to like your other charts were really marked up and all sorts of details. Nope. Like you're focused on the important things. And look how it's working. Oh, this is what I was going to say. So this doesn't this kind of bothered me to begin with when I first kind of saw it, but like because I kind of agree with John. Like this has moved away. This is the kind of essence of the low volume pullback. It broke your channel like you noticed, and it broke it here on some volume. And look, here's your low volume pullback clearly. And like clearly here the aggressor's coming in after a move away at the open, so it really looks like it wants to do that. What I don't mind at all here is this here is because we've seen this with others content over the the months here, and I think it's really good to avoid this, and you did avoid it here. Usually we see high liquidity up here and people are getting into that, like if you did down here, right? And I think wait till it kind of clears that, and like we don't really know yet here is and it could just be a false breakout, go all the way back down and then come back up and do that, but what I like here is that you've got the liquidity up here. So you got some room to run. On the downside, though, as you know, this came back against you, and you were down underwater a little bit for a little bit of time. But then it did it again. It's another low volume. This is low volume pullback followed by another low volume pullback, right? And here. And then, I don't know, you could take some there, but take some off or trail like you did. Those are my comments. I also really like more and more, like as price is getting really far up here, like trail more aggressively, because you don't want to, you gave away, I don't know, 6-7 points or so, maybe more. I think just to confirm, what John is recommending. I think it was the same thing that we did a webinar with Axia Futures a couple of years ago on trending days breaking out, and they gave it some room. Like we do with two structures away, but then when it gets up there, especially like he's talking about like end of the day type of thing, it's been trending all day long. He moves it up pretty aggressively then, Like it was, maybe two structures away here, but then at this point, he'll start looking for, maybe this structure here. It's a little different, but you get the idea. Like,
Yes.
it's already moved a lot, and John is saying like, hey, you got some other things happening in here that you have the potential for giving up some of that gain. So consider just we never know, and this could have gone up more, but not a bad deal to take some good gains off the table. It's up to you. It's more of a personal thing, but anyway, that's all I got. All right, let's see.
Very good. Good stuff.
Yeah, it's
Thank you.
really good, Vinfra.
Yes, sir.
Just the one there for Vinfra.
Let's move on then, and let's see. DNT left. Sounded like he was getting busy with the family there. We have who? Shark and Laura. Shark, I know you created a don't have it. Hold on a minute. Find it again. Oh, you created a file.
It's in the coaches.
Yeah.
account.
Yeah. Okay. Right. Okay, I must have closed it by accident. Okay, so you've got Nan and Becker, and Nan is here. So let's, and it's been a bit. So let's invite Nan up. In a minute. Nan, always a pleasure. Welcome. And Shark, take it away.
Nan, excellent work. Your markups are very precise, to the point. You're not filling the chart with a bunch of stuff. I really like that. It's simple, really good. You've identified your passive accumulation, your break of structure, aggressive accumulation. What I do question on this one is what is your high time frame key level? What's the definition of it? What are you identifying at that 65, 80, 50? And I know this is March 31st. I know in the replays it can be difficult to go back to previous days or whatever and find those levels. But I was just curious what your high time frame level is here.
Okay. Yeah, I marked it up as a higher time frame key level, and the definition of that for me would be perhaps the 1 hour chart, or more likely the 2 hour and the 4 hour chart, where price either bounce off of this or revert back as it did in this case at that 60 65 80 level. So that's
so like
yeah.
level. Like support or resistance. Okay. I was looking at your trailing stop, and I sketched in a couple white lines there that sit above some previous pivots, which I think price tends to come back, test some of those pivots before continuing. So maybe hold back a little bit there on that super tight trailing. But this is a great trade. You take your exit as price rolls over at the trendline pivot low. I think it's fantastic.
Okay, all right, thank you, and I'll take a look at the trailing closeness as you mentioned.
Okay. Let's see. Coaches. David, any comments?
I'm a day, if I'm right, Bruce. Thanks. This is coming into the cash close. Yeah.
Is that right, Nan?
Is that
Yeah,
cash close?
that is correct.
Okay.
Yeah, so we're coming to the cash close. You've got that spike up 10 minutes before the bell. As you would rightly say, Bruce, whether that's a stop run or something else, but you've got that vertical move with volume. And if I ignore that volume, what is David on about ignoring volume? But if I ignore that spike volume and then I look at the selling volume that comes in next to it, it's comparable to some of the levels we've had before and is then picking up. And it's very aggressive. The angle gets pretty steep going down. I love that entry. Could you've got in a bit before? Yeah, maybe around about 77 and a bit. Possibly, because if you look at that microstructure, Bruce, at sort of 51, 52, you have got that lower high getting printed when we've scooted up, and then it's coming back down. There. But it would be aggressive. That would be a very aggressive short, David, round about there this time of day. So it's Captain Hindsight and Monday morning quarterback. As soon as we start all the words in a row. But as soon as we start to sell down there at sort of what's that 50 or no 51, sorry. That is the time I haven't said much about scaling tonight, have I, apart from when I was talking to John. That is the time there where you could really be hitting it hard on like tonight on the rally into the close. This is the same time of day when we're selling very hard into that closing bell. And when those drives happen, they happen fast. Back to John, if I may.
10 minutes before the close is the start of MOC, market on close. And it can be a very dangerous time. I don't trade during this time. And one reason is because market makers are not obligated to provide liquidity to these markets. So oftentimes liquidity will disappear and volume will come in. Just exponential volume will come into the market, which can make for a real nasty time. So, just separating that aside, again, that's my declaration. I don't trade during this time. You've got a very strong move to the upside. Look at that volume bar. And with that kind of move, filling that liquidity up there, I don't expect those moves to last for very long. And so, I would have been a little bit more aggressive because I want to limit my exposure and getting short a little higher up. As soon as that break at 79 was taken out, I would, if I was going to trade this in here, it would be up a little bit higher so that I could put my stop over 81 and a half. But I do caution you about trading MOC. Like I said, it can be really nasty. There's either a ton of liquidity there or there isn't anything at all. But again, market makers are not obligated to fill you during that time. So it can be the wild, wild west. So I just caution you about that. But everything else that you did, I think is really nice. Just consider my word of caution for during MOC. Bruce.
Thanks, Jim.
Yeah. I agree with that. Like usually it's right at this mark right here, and you can see some of it.
Yep.
Like, but a lot of times it's a lot more distinct than that. Like all of this liquidity kind of dries up. Or I'm sorry, you might see it kind of dry up like this, and then a whole bunch adds in as well. And it's a big game at the end. And it's like John said, like, they're providing liquidity way down at other levels or way up. And you get these big violent swings. I find it very tricky because I don't know what the larger players are doing at the close. I mean, there's certain plays to look for, just like in the open. But it's something I need to look more into. It just I shy away from it, to be honest, unless I have a clear direction. And actually, I mean, there's some nice things in here, Nan. I'm kind of with Shark about like what's the higher time frame level. I tried to find the chart here. and this is the candlestick chart at least. Here is 1545. Here is 1550, right? So all it is really this little blip up here or down here, and before the close. But you know, these can be really nice moves down into, like, you know, the structure, top of the structure here, or you know, middle of that little structure in here. And what you do have here, that's really nice, is you've got this move stops everybody out, you know, maybe gets people going the wrong way. It's been clearly, you know, absorbing, and then it trickles off, but now you're below that move. And I think you nicely waited for this, because you know, here you see that volume come in, and then these are just nothing but like low volume pullbacks, exhaustion, and you're getting in and looking for that move back down into other structural areas or liquidity. And
that pivot low, Bruce, that pivot low that you just drew the box around.
This one?
The next one to the right, the vertical box.
This one.
Yeah, see, I think that's really is the perfect entry for this piece of price action, right where Nan entered, as that pivot low broke.
Yeah, I like it too. I mean, because look at all that selling, and it's retested up in here. It did one more retest, but you know, you stuck to your guns. Your stop was in the right place, and you know, you got the momentum move. That said, like, this is just a huge caveat of time of day. But I don't know, Nan. You seem to have, you've been doing this at the close for a while now. So maybe you're starting to develop some strategies around it.
Yeah, well, Bruce, the thing is, and I heed the caution of, you know, everyone. I mean, John and David, in terms of the time of day. Overall, you know, we had the structure, with the passive accumulation, the break of the trend line, and the volume coming in right after the horizontal mini structure. So up to this point, you know, at 1552, 51, everything was methodical, and the craziness hadn't appeared yet, or you know, impacted this trade here. But I'm familiar with it, and I'm not saying that you know, I champion that, but you know, being mindful of that, if we took the time of day out of the equation, then the confidence for the trade was there, and why not? So you know, it built my confidence to get into the trade there, because everything was methodically set up, and you know, I had all the I was looking for.
I don't disagree one word. And you know, Nan, if it's working for you, keep going. Just yeah, and you heeded the you know, the comments. So great, and you're totally right. Structure's there, and we're below this structure here. This is where you got in. You're looking for this to move. See, guys, any other comments?
Yeah, one other thing to consider is the day of the week, because what also goes into this are the options expiration, Nan. So I would be curious to see the effect of Monday, Wednesday, and Friday, because on those 3 days, you're going to have an extra expiration, whereby the Mag 7 stocks now have expirations on Monday, Wednesday, and Friday. So there's a lot of squaring up from the options community that comes into MOC. And like I said, you know, the structure's there. It's just that I've been caught in it a bunch of times just because it was so random at the end, and I had very little control over it. So keep going, keep working at it, but just know that you're entering into a time frame that you usually don't have at any other time during the day. That's all I'm saying. And especially on Monday, Wednesdays, and especially Fridays when all the expirations are coming in, you've got orders coming in for all different kinds of reasons from all different kinds of players, and it can be kind of a free for all. Bruce?
Yeah, that's a great point, John. I mean, this is not only end of the week, or it's the middle of the week, but it's, you know, end of month, end of quarter. And there's a
Oh, good
lot
God.
going on,
Yeah.
potentially.
Yeah.
So it is to kind of, I don't know. I think I just see erratic behaviors during those times, and be careful. That's all.
Yeah.
But everything you said, Nan, is totally just.
Yes.
The setup is there. You took it. You did a great job. All of the criteria is there, and you traded it really well.
Yeah, and learn to trade it now, which you are. You know, I repeat before. I used to trade before Tom was doing his lab. I used to trade a lot with Tom, as you've all heard before. And Tom and me would often trade the close, and there were days that we didn't take a trade together on the close, and the other days we were murdering it because the signs and the volume and all the things that we look for were there. So it can be a very profitable time of the day. But I think, as Evan's rightly pointed out, you can also get your limbs torn off you, John, can't you? So you got to, as long as we know that when we're trading that time of day, that's fine. That's the thing. Yeah, it's cage fighting. It really is. It's MMA.
Yeah, it really is. It's something to really take into consideration seriously. Yes, sir.
Yeah. And I used to trade with HE as well. I should say that, didn't I? I used to trade the close with HE as well, Bruce.
Okay. I don't know about you guys, but I mean, what I've seen is at these kind of volatile times like this, and like we're mentioning, time of day, time of month, you know, etc. You look for the bigger swings. Like like you said, you can be immensely profitable. And it's gonna with that kind of volatility, it's gonna most likely it's going to trade into some of these bigger swings. And you know, you can really look to take advantage of that. And you did, basically. You got out right here by a trail. So great trail. Anyway, Nan, it's a really great job.
Yeah, the imbalance readings are reported at 10 of. Right, the 1550. The imbalance readings come out then, and then everyone seems to kind of work on it at 5 minutes beforehand. That's what oftentimes I see. But that right at the 50 mark, Bruce, that's a marker because, like I said, that data comes out that everybody's poised on. Relatively speaking, this looks like a pretty tame MOC. Today was just gosh awful. I mean, you didn't rip torn to pieces today because it went both ways in a heartbeat.
I put that chart in the chat, Bruce, if you want to drag it out. Sorry, John, you can talk to it. Yeah, it's in the chat. That's just now. Over to you, John. Sorry.
No. Yeah, in fact, I was just looking for that on my yeah. I mean, it's just
UK time, 9 o'clock.
It can really pull you apart because there's so many factors coming into play. Yeah, but just look for those time markers: 10 of, and then 5 minutes of. Because of the reporting.
Well, that moved at 10 off there. You can see it, can't you? At 2050, right there.
Oh yeah,
volume comes in
every day.
Yeah.
Yep.
Huge move. Volume pullback. Thank you, Bruce. Off it goes. Yeah. Liquidity, off it goes. Today was a nice one. But if you,
Look at your trend line break accumulation right there in front of you.
Yeah. And we had the options thing as well, didn't we? That I shared it on. You were rightly correcting me on that one as well, John, didn't you? Which, let me throw that into the chat as well, Bruce.
This should have been options expiration here. So the 17th, third Friday.
No, that's today. What I put in. Oh, you mean?
Here's today.
Yeah.
Well, I mean, wouldn't. I mean, this is options expiration, right?
On a Friday, yeah.
Okay.
I just put in there what we had for today. That's what I'm saying.
Okay, understood. Okay. Let's see.
You see that, Bruce, in the
Yeah,
chat?
just getting to it, John.
There you go.
Okay. Ooh, yeah.
Lord help, God help you. Right?
Yeah, that's tough.
That's oftentimes what you see. Yeah. And if you can trade that, God bless you. Absolutely.
Yeah,
You first.
yeah, that's a lot going on there.
I mean, that's just, yeah.
Yeah. Well, anyway, Nan is unlocking the secrets.
Glad.
No,
Big man.
I'm
Love it.
taking more caution now. So
Good.
we may not see any of those coming from me.
Ah,
Enjoy it, buddy.
he
Enjoy
has
it.
received the message. Yes.
I have.
God.
But look
You're
how
making
good
me
it
nervous.
look how good it looks, though. It's got everything in it. You know.
It's a lame one, man. I'm telling you. This is really kind of
Still
odd
moving
for MOC.
right at the pivot low.
Yeah. Let's see. We're up on the top of the hour here. I guess Shark, I can give you one more here, and we'll try to maybe go through it quickly. Any comments on this one from Nan?
You know, there's not a lot to say about this one except it's really good.
Yeah.
You've identified your key level, overnight low, and intraday zone, passive accumulation. So I personally have a hard time with the liquidity on NQ, but
Yeah.
as you said, you verified it in a close-up view.
Or Shark,
I think,
or jump over to the micro. Liquidity's better.
is it?
Yep.
Okay, yeah, I just know on the NQ, I mean, the liquidity is just wild looking.
Yeah. I'm sorry, I interrupted you.
No worries. You know, your entries into that aggressive buying with initiative buyers after that pivot high break your minor rally high, and you know your stop is trailed fantastically below your previous pivots here.
Yeah,
You know,
nice.
pivot,
And
and you know, price kind of starts to consolidate there for, I don't know what that is, half an hour or something, and you just take your position off, you know, rather than let it come back to your stop. I think that's great.
All right. Yeah. Thanks. So,
let's turn it over to David.
Thank you. Is this London close, Bruce? I can't see the time at the bottom, but I'm looking at the top at 11:39. So
On zoom out. It's not this one.
okay, yeah, it's getting
Yeah.
it's getting to
Yeah.
close. Yeah.
Ugh.
Yeah. So it's in that usual frame thread of time of day, Bruce. So yeah, great trade. 11 o'clock, then you get that break, volume comes in. I love it. But as you're rightly calling out, Shark, in terms of volume on NQ or MNQ is a little bit, can be great some days, and other days it's counter to what the price is doing. But otherwise, like it. You got liquidity up at the 900 level, at the central level at the top. So you've got a destination to go at. Fantastic. The time's on your side. They're driving it up into the European London close. Perfect. And you could channel that up, Bruce, if you were drawing channel lines from sort of 11:10. You'd have a nice, lovely little channel going along there to, if you hadn't got in initially, where you could start to get in, and scale from there. Perfect.
Yeah. John, any comments?
No, this was really nicely done. No, nothing to add more than what David just covered. Very nicely managed. And it executed nicely. Absolutely. I do have one quick question for you, Bruce, since you mentioned NQ. Bookmap allows you to execute micros off the NQ chart. Is there anything in the development queue that would allow you to do the reverse?
I
Chart
have
the
asked
micro
for exactly this. I didn't get a straight answer.
Okay.
So, but I know exactly what, and I've requested it because the liquidity map is a lot nicer.
Yeah, the heat map. Yeah.
Yeah.
Why do you think that is?
Because there's a lot more liquidity.
There's a lot more volume.
Yeah.
I mean,
yeah. There's like single contracts here in the NQ a lot of times, but in the MNQ, it'll be like double digits.
Mhm.
Okay, that makes sense.
Yeah. So the heat map will, it doesn't look as stark as this. I just had a quick comment here, and I kind of go back and forth on this, but I really like what you did here, Nan, because you waited for, and your patience is just excellent. You waited for it to clear this level here, right? And now it cleared on volume. That's really key. Okay, so we've talked about with these reversals, and you're looking for that passive accumulation on the way down, and then these pockets of buyers that kind of like nudge, and like it starts to, so you got some passive and some aggressive, but the aggressive buyers, they haven't taken control yet. Here they have, right? And now it's traded through that, and usually I don't know, I think what bothers me, or personally what bothers me, like I don't know if it's advice to give to you as a trader, but like I don't like seeing the swing up here, and because a lot of times it might stuff into that and then just go like this and maybe even fail. But I mean, clearly, you're seeing you got the aggressors, you got the pockets, you've got the passive accumulation, you got the break of the structure of the trend line, you got the break of the structure. So I think here it's just, I mean, it broke this little swing right here, right? So this kind of went up, went down, and it went back up, and you saw volume. You're looking for it to move. Even though it's kind of in this thing here, I think it doesn't really matter. I mean, you've got the strength. You're on the aggressor's side, and you confirmed it with the volume dot as well, and you get in. But do you see what I'm saying? I guess like I'm confirming your entry, and I'm just kind of figuring it out, for myself, I guess. Like a lot of times I see it up into here, and there's no liquidity, but it is a swing, but can we get up above it? And we do on volume. So you got a green light here. Maybe the rule is, or to look into, is like these little pockets in here. These are buyers. They're in control now at this point. So you can look for that, and the battle is kind of over here. So that's something to look into further, of kind of matching up like these buyers in this pocket and that swing, because we're not seeing selling pressure in here. The selling pressure was, it sold off here, but really it's down here in these areas. Anyway, I long-winded way of saying, like, great entry. You're grabbing the momentum, and yeah, way to go. This is I think this is a fantastic trade.
Volume and angle, for sure.
Yeah, and you got David's angle.
Yeah.
Right. Yeah.
Okay.
Excellent work, man. Keep it up, please.
And well done, sir.
Right. Thank you, guys. Thank you.
Yeah. One more thing, Nan. Like, and you hit the exit button up here. Flatten. Right. You didn't wait for it to come back down here. You thought maybe it would, because it kind of hit up here, and you're starting to see like it's getting kind of top heavy. There's a swing, there's liquidity, and maybe it fails here. Maybe you get sellers down below it, and then you start to give away. Instead of giving away, you just said, I'm out.
For me, 30 minutes is a very long time to watch price go back and forth.
Whew. Yes.
Yeah.
Thank you.
All right, guys. I mean, that's everything. If there's any parting comments, let me I think, is it Shark's turn?
Yes.
Okay. Shark. David or John, you'll be next time. I think David went last time. So,
I did, yeah.
Shark, any parting words of wisdom?
Well, I think it's really fantastic to see all the new members and how much work everybody's putting in. You know,
Yes.
there's so many posts every single day. You know, you can see the growth in everybody. It's great how much the pilot program has grown, and then you see all of that coming through into the academy. I think we have a lot of good stuff coming, Bruce.
Yeah,
You
yeah.
know, as people start adding their own stuff back into these trades and making them their own, you know, then they will, you know, they will start to hit the academy as individual trades. It's been really cool to see just the huge growth since you started the academy. And I think everyone's doing a really great work. It's inspiring. It's fantastic.
Excellent, excellent. Yeah, thank you,
And
Shark.
you, John, and David, you know, your insight is just, it's so much. It's, you know, we're very lucky to have you guys to teach us this stuff. You know, it's you know, I recommend everyone throw out as many questions to these guys as you can, because we're very lucky. So I appreciate you guys very much.
Very kind, sir. Thank you.
Thank you, Shark.
Yes, sir.
That is the last word. I just want to just kind of round up though and mention here. There's a lot of other feedback. So if you weren't, we only spent time on a few people, but in depth here. Laura put together a Notion file for PMAG and also for Mare. They're both doing just excellent work. Mare is doing really great work. That he's more of a new trader. PMAG's been very consistent and doing great work and great improvement. Here's the file from DNT. We've got Nadia and Li Kai is in here as well, and I'll put all of these into the Academy room. So if you guys want the feedback here, and then there's also Moby, Taboho. You were covered in here with 3 different trades from Moby. So great stuff in here, and we will go over you guys next time. Mare, you know, PMAG, Taboho, others that Kier. As well. Kier's been doing really great work as well, a newer trader into the Academy. Yeah, just make sure that you put in some content into your spreadsheets next week, and we'll go over you guys. Okay, I've already marked you up as in line. Okay, thank you all, and thank you, Shark, for the parting words.
Yep.
Cheers, guys. Take care.
Thanks,
Bye-bye.
everybody.
Good night.